yeah. In the studio with us right now, Jerry Williams, American Precious Metals. We're going to be talking about gold. It dropped, gold and other precious metals for that matter. Gold dropped $90 per ounce. Was it yesterday?
Day before yesterday.
Day before yesterday, okay. It had risen to?
Well, it rose from 1,600 in January to 1,800 at the last day of February.
Okay.
So that's a 12.5% move in a very short period of time, which leaves it wide open for profit taking.
So it dropped $90.
It did.
Bringing it to 16 something.
Well, it was right at 1,700.
17 something,
and
you said,
as we speak, it's 1,712 right now.
Okay.
Why do you think it dropped?
Well, a couple of reasons. As I said, profit taking was a major reason. There were huge bets that it was going to go push through 1,800 and go even higher and test last year's high of 1,900. When Mr. Bernanke spoke to Congress, everyone was expecting him to say we're going to have another round of easing and we're going to have some more money creation, we're going to hold interest rates at 0 till 2014. Yeah. He didn't say that. And his lack of saying that caused everyone to sort of panic. And you had 100,000 futures contracts traded in a period of 1 minute.
Wow. 10
times the normal, it had to close the market for a few minutes.
So you're saying a lot of people sold?
It's all done with hedge funds, huge amounts of privately managed money in trading rooms around the country. And so those of us who are holding, 1, 2, 10 ounces, we get whipsawed around along with the big fellows, but that's what happens.
Now, in saying that, today, do we sense, are we seeing, it's just one day, but do we see stabilizing a bit? Do you feel it will?
I do, yes. In fact, I'm looking forward to another new high. I initially was using some research that showed a $2,000 price by summer.
Do you concur? Do you think that?
Well, when it does this and drops nearly $100 in one day, you kind of have to step back because it's going to take a little while to repair that damage. People with computers look at that technically and say, wow, $100, it's going to take some time to rebuild that. It got awfully high, awfully fast since the beginning of the year based on Mr. Bernanke's monetary policy of, creating unlimited amounts of money. That's why we have a high gold price, is unlimited discipline on money supply.
And a lot of people were turning to gold instead of the stock market and mutual funds because they thought it was a better investment and they could.
Yeah, when you say a lot of people, we have to understand a lot of this is foreign. You have 1.5 billion Chinese people, and you have India and Europe, and we're kind of trailing along here. I would say probably 90% of the American public doesn't have any gold. So we're the last ones in.
Oh, wow.
But our dollars are all over the world, and people are abandoning those dollars to go into physical metals.
Now, typically when gold rises, silver follows it.
It does, and so do some other commodities as well. Yeah, gold has become a currency now.
Right. Are we seeing that happen also? Is silver trailing gold up the ladder? It
is, and silver is in shorter supply. Governments don't own any of it. And it can get whipsawed around too. So silver is $35 an ounce now. Last year it almost hit 50, dropped down under 30, and so silver is relatively cheap.
But now, you can hold gold and silver. You can hold precious metals, own them in different forms, different ways, can't you? Would you explain? Because I think some people.
Well, the more popular way right now for retirement funds is to hold it in an exchange-traded fund, where the gold's held for you on the exchange, and you buy 10 shares of a. Let's say of this particular fund, and that equals 1 ounce of gold.
But you do actually own the gold?
Well, you have a claim on it.
Okay.
So you don't have a physical gold, you have a
I don't
paper
do that.
claim?
Basically, my recommendation is to hold it physically.
You like to have the piece of gold.
Right.
Yeah, I'll take that. Thank you. Are you giving that to me? I will accept that as a gift, Jerry. Thank you so much. Thank you so much. I'll do that. Okay, so having the physical gold gives you a sense of
security.
Having the physical gold.
It's outside the banks. If there's a financial calamity of some kind, as we've seen in other countries, Argentina's one, some of the Asian countries, the banks just simply close. If your money's there, it just disappears.
This is 99.99% pure gold.
That's great.
Joseph, it is 1 ounce.
Why would someone hold a claim if they could hold the actual gold?
Well, like I say, retirement plans, part of it is you just don't want to have to, have it stored someplace. And then when you want to sell it, you pick up the phone and sell it.
That better be in a safe deposit box if you have it, huh?
Exactly. That's my recommendation.
Your gold is somewhere, even though you have a claim. It does exist somewhere.
We certainly hope that it is. That's just it. This is the real thing.
Jerry's doubting this a little bit, I can tell. That's the second time he's answered it that way.
I would think I would want the actual physical gold.
That's what we do. And I'm trying to get the message out to people that physical gold in your safe deposit box outside of dollars.
Right.
So like some of our foreign
Okay, so let's say somebody has purchased gold in the first form we're talking about, a claim on it. I have paper that say such and such, such and such. Can I go and get my gold?
No.
Oh, okay.
No, there are some exceptions. It has to be a large amount. But the average person can't take delivery of 10 ounces of gold out of his exchange-traded fund.
Okay, now let's talk about buying gold right now. It's high. I mean, typically you buy something when it's low or high, you make a profit, we know that. But it's high. To buy gold right now, we would have to really be very optimistic that it's going to go higher, wouldn't we?
Right, and therefore pessimistic on the value of the dollar. See, money is supposed to have two functions. Number one, it's an exchange, a medium of exchange, which we all use.
Right.
Number two, it has to be a store of value. And our dollar has failed miserably over the last 5 years, 10 years, 40 years as a store of value. Right. If you look at a chart of gold going back just 10 or 12 years, you know, it's up by sixfold since 2000. It's up by double in the last 4 years. So it's not speculation pushing it up, it's people abandoning the dollar worldwide, not just here.
Yeah, right.
That's right.
Yeah.
You were sensing that
right.
worldwide. Yeah, I agree.
So like I say,
So
gold's
dollar
become
drops,
a currency now.
gold goes up. Dollar drops,
that's
gold.
right, that's correct.
So right now I'm holding in my hand about $1,700.
Right.
Yeah, thank you for the gift, Joe.
And so your company sells gold?
We buy and sell.
Okay.
Physical gold, physical silver.
So if I wanted to buy some gold,
palladium.
I would come to you and I would actually get the physical gold.
That's right.
And then putting it in a safe deposit box is fairly safe. Or it's very safe, isn't it?
Yeah. So far, no one has ever raided safe deposit boxes.
Right.
In this
We know.
country.
You have some dollar bills there. You have you know.
Well,
okay,
we mentioned that why you would buy gold, and it's a hedge against inflation.
Okay.
And that brings up the subject of hyperinflation. You mentioned the gas prices, for example. They're getting out of sight. Food prices. Well, here's a graphic example of hyperinflation. Let me make you both trillionaires for having me here today. That's what happens when the currency gets out of control. Next thing you know, it has 14 zeros behind it.
Okay, this is
that's from Zimbabwe.
Zimbabwe Reserve Bank, and that's $100 trillion. What actually, in reality, is that worth now?
Well, in 2009, the last year they made those, that would not buy an egg in Zimbabwe.
Wow.
Really?
That's how bad it was.
Wow.
Are we headed here?
Well,
because this, you know what, folks? Because this very, very seldom doesn't buy an egg anymore, and this is a $20 bill.
I'm glad you did that, because here's what a $20 bill used to say on it, and it says it's payable to the bearer on demand. $20 in gold from the Treasury.
Exactly.
The new one doesn't say anything except this is for all debts, public and private. It's basically, I owe you nothing.
When did we go off the gold standard?
1933, but we had a gold exchange standard. What really started it was from President Nixon. Suspended convertibility, so that you could no longer turn in dollars if you were France or Germany in exchange for gold, which was our promise.
Right, we were supposed to have so much gold.
That's why they were the reserve currency.
This colored money looks like Monopoly money to me. It's like funny money.
Doesn't say Chuck E. Cheese on it. That's the only.
No.
Well, Jerry, listen, great information. Huh? Please promise to come back and keep us updated. I love the way you explain it. Thank you so much.
Nice to meet you.
You bet. Nice meeting you.
When we come back, the author of Managing the Gift of Your ADD HD Child, we have Dr. Kevin Ross Emery with us. You stay right there.